Hey yo, what is going on, viewers of the tube? My name is Tyler and welcome to the channel that pulls content so far out of left field that sometimes I think some of your faces at home look just like this Mankey's.
Yeah.
You know the surprise, it's time for Chico Crypto. Well, I think a ton of traders have the memory span of a baboon because over the weekend, Bitcoin took a big dip down to 8,800 support. Bounced off that on Friday and hovered around that level until Sunday when it popped over 200 bucks back above 9K resistance. And it seemed like every trader and their mother forgot about the dip on Friday and turned extremely bullish for some reason. On Sunday, I noticed this heavy on Twitter, with the overall sentiment calling for Bitcoin to make a big move up. Oops, BTC did it again. Bitcoin back above 9K with the famous roller coaster gif. Crypto Bitlord on Twitter doing a live stream saying it looks like we are primed for the next push. How this guy has over 100K followers on Twitter baffles me. Of course, there was the infamous, I'm calling it the last time we see below 9K Bitcoin. Then they comment, that didn't age well, less than 12 hours later. And finally, the Binance butt sniffer Pomp tweeting the BTC halving isn't priced in, getting some retail FOMO brewing. But if you watch the Chico channel, we are short-term bearish, which is pretty easy to see if we pull up that Bitcoin price chart again over the past 7 days. Even before the dump, in the dead of the night on Sunday, it's an ugly chart. A series of lower lows, 9,400 and then 9,350 on the 6th, 9,250 on the 8th, and then finally the big dump on Friday, taking it down to 8,800. Well, CME closes over the weekend and doesn't open until yesterday. Thus, the pump on Sunday up to 9,000 resistance created a CME gap, as those future contracts and trading is shut down in the regulated world. Well, these gaps usually get filled. So all those people calling for bullish movements, come on. Like clockwork, the CME gap was filled pretty much immediately when CME trading resumed. So what do I mean, short-term bearish? Well, from my videos over the past few weeks, I've shown AngeloBTC's tweets. First, he predicted the 10K to 8K drop a month in advance. Then he made the 6K call just over 2 weeks ago. Last week, I showed the charts today are acting spookily similar to how it played out right before the 10K drop. Not gonna go through that again, the video is in the description if you wanna check it out. But why would I trust Angelo? He is the technical analyst and former #1 trader on BitMEX. Yes, he was playing with the big whales and still making out like a bandit, and I wouldn't bet against his calls. And if it's going to happen like the last one, we have less than 2 weeks until the dip to 6K. But this guy isn't a long-term bear, as if we go to his trading view, his chart posted is calling for BTC to hit 30K by 2021. He posted a chart in early March when Bitcoin was at 3,800. And I love what he says in the comments below. The end goal for Bitcoin as an investment is a binary outcome. It goes to 0 or you 10x your investment. There is no in between. It's really that easy. If you don't believe me or don't get it, I don't have time to try to convince you. Sorry. Although not everyone is fully believing the 6K drop is going to happen, and for the markets to officially defy Angelo, Bitcoin is going to have to push above 9K and stay above that for some time for positive sentiment in the market to return. Some traders do see a turnaround, like Crypto Rand, very popular trader and analyst with even more Twitter followers than Angelo. And no, not Crypto Rand as in Rand Nooner. That guy has no idea what he is talking about. Rand posted this chart of the falling wedge, pointing to a breakout as the price closed above resistance. And now there was a retest of the former resistance, which is now support. And according to his analysis, we will bounce and break out soon. Another bullish chart I would like to show is from Galaxy BTC. They tweeted, people waiting for 6K BTC keep forgetting one thing. In bull markets, Bitcoin drops 40% and then doubles its price. If we hit the bottom in December of 2018 and are currently in a bull market, then the past says after this 40% drop, we should see 16K BTC soon. With Galaxy pointing out that this current drop off is similar to the one in July of 2017. And finally, the most bullish thing, the lone CME gap that still lives after the one was filled yesterday. And it's bullish, a tiny gap at the 11.8K level. But the thing I would like people to realize is the price range of in between 6K to 8K is where the Bitcoin price should be if natural growth took place, and based on fundamentals within the mining industry. And mining difficulty is one of the most recent indicators of this. On Monday, the Bitcoin difficulty dropped by the largest percentage, 7% since its 3K low in late 2018. Difficulty is basically how hard it is to mine a BTC. This mechanism is a self-stabilizing device for Bitcoin, ensuring network security is sufficient even when the price and thus the network and mining activity drops significantly. So this drop means it's easier to mine a BTC for miners. More BTC equals a higher ROI. Thus, more miners joined the network, as the hash rate once again jumped above 100 million terahashes, a 20% spike from 80 million just the day before. And this caused some people to say that this was proof that the average cost to mine one BTC is about $8,000. Although I have already did an analysis of this, and the average cost is much lower. Based on public information and statistics, I estimated the distribution of mining across the globe. China still dominates with 65%, but other countries are making headway, especially the US, which I estimate to have 10%. Then Russia, Czech Republic, Georgia, and others. Based on these distributions and electricity prices across the globe, 6K was the break even for US miners, because this is where the USA miners will become unprofitable, and just above 3K was break even for China and Russia. The next major resistance will once again be the 3.2K to 3K range, as this is where these miners will become unprofitable. This is not factoring in hardware or maintenance costs, and you gotta make profit in business. Businesses usually like at least 50%. Thus, I would put Bitcoin's price in between 6K to 8K as where it should be for a profitable, healthy mining industry. Now for a sponsored segment of this video, as I haven't done one in a long time and I need to keep the channel going. This video today is supported by KaratGold Coin, the crypto looking to combine the old store value gold with the blossoming blockchain ecosystem. And like always, the full agreement can be found in the description. KaratGold Coin has asked me to put forward their defense against a recent smear campaign launched against their project, especially from the website warningkarat.com. CEO HODLS put out this Medium article in response to the accusations. Karat found the attack is being hidden under a service provider who allows domains to be registered under its name. Although they suspect it's coming out of Russia, as just before the website was put up, the Karatbar's website was DDoSed, with traffic coming out of Russia. According to the article and Herald, looking at the overall circumstances that are about to get laid out, the suspicion that Mr. Marvin Steinberg, a former business partner of Karatbar's, could have something to do with it, might arise. The Medium article goes into the former relationship with Marvin, who ran the KBC ICO back in 2018, the business relationship they had, his failed ICO token transfers, and the eventual lawsuit filed against Marvin by Karatbar's in January of 2019. They admit their poor judgment of hiring Marvin did lead to damage that affected early buyers, but the lawsuit did push Marvin to settle and get most of the coins and technology out of his hands. Marvin is now being investigated by Germany's Stuttgart's DA for fraud, and Karat says they are fighting back. They asked 3 questions, and if any of them apply to you, to get in touch so they can get all the facts straight. The final thing I would like to bring up is regarding Bitcoin versus Ethereum, because the debate is going to heat up, especially as Ethereum moves to proof of stake. Now there's an argument about which coin is best, due to Bitcoin sticking to the Austrian hard cap of 21 million, while Ethereum has continued inflation, which will provide the most value. Well, the markets right now are saying Bitcoin, as its market cap is higher. Well, Vitalik just gave some interesting insight into why he thinks this may be cause for Bitcoin concern in the future. And this is a speech I think everyone needs to hear.
The challenge is, right, that there's this kind of looming elephant in the room over, a lot of different cryptocurrencies that kind of committed to a capped issuance schedule. And they really committed to this idea that issuance is evil and we must have a hard cap, and because a hard cap is the Austrian way, and we must take a strong stance that we are not like those hyperinflationist fiat gold bugs. And the but the problem is that like you need to pay miners for security, and the story has always been, well, we'll use transaction fees for this, right? But if you look at reality, right? So right now, like I think in Bitcoin, for example, last time I checked, it was about the daily block reward was about $7 million. The daily transaction fees were about 140,000. That's about a factor of 50 difference. In Ethereum, the block reward is about 2 ETH, and the transaction fees are about somewhere between like 0.03 and 0.2 ETH, depending on like which day it is and whether or not some Fairwin or some other crazy application is burning $1 million in fees because of bad mechanics or whatever. But in general, there seems to be this kind of about factor of 50 difference between issuance and fees, and it's not at all clear that fees are going to be able to kind of like. Basically, it's not at all clear that blockchains are going to continue to be secure when issuance is 50 times lower than, or once the amount going to security providers or miners or stakers is 50 times lower than it is now. And like I do think that proof of stake does better than proof of work with lower security budgets, but even with proof of stake, like I'm not confident that like Ethereum proof of stake with zero issuance is something that it is kind of guaranteed to be able to survive, for example, which is why even past proof of stake, like we're decreasing the issuance heavily, but there is still some issuance. So I mean, one of the common replies to this, of course, is like, oh, cryptocurrencies are obviously going to be 100 times bigger in 10 years, and that'll cancel things out. But number one, you're not allowed to make crazy, super optimistic assumptions if you're going to argue about the security of a system that protects people's life savings. And number two, like that's not even a correct argument, because if a system gets 50 times bigger, then sure, the security budget becomes 50 times bigger, but the size of the attackers who care about breaking it becomes 50 times bigger. So like I think the relative actually matters more than the absolute, and that's an area where kind of the people that focus on the absolute being kind of canceled out by growth of the ecosystem are just wrong.
So if you didn't understand a word of what he is saying as Bitcoin's block rewards keep shrinking, the security budget of the Bitcoin blockchain will shrink as well. Eventually, transaction fees won't be incentive enough for the miners to keep the network secure, as Bitcoin issuance comes to a standstill. Thus, proof of stake and a set inflation will provide better security long-term than proof of work. As Vitalik admitted, proof of stake with no issuance wouldn't work, just like proof of work. So the perfect solution, where a system can just run off transaction fees, is still to be seen, if at all. I know some of you are nanobugs and are like, gosh darn it, Tyler, this is what Nano does. It's the perfect solution. All I gotta say is if it was, I wouldn't be seeing it at its market cap it is today. Cheers. I'll see you next time.